be lazing on a Sunday afternoon. Thanks for showing up today, you guys. I guess we're all lazing on a Sunday afternoon to a certain extent. But I wanted to do this stock hunting webinar, and we've done these in the past, and I know they're pretty popular. And I'm actually surprised to find a number of people showing up this afternoon, even though we had a pretty spontaneous, or shall we say, impromptu notice of the webinar. So I guess some of you aren't watching football today. In any case, let's get this show on the road. Give me 1 second here. The first thing I want to take a look at is the indexes. And I think we had a holiday week last week, obviously, with Thanksgiving and shortened trading week. And pretty much by Wednesday, there wasn't too much going on. And a little bit maybe on Friday, but not too much, as the indexes have pretty much held tight sideways. You can see the Dow here. We're going to run through all the indexes. Pretty tight here. I'm running a weekly chart on the right side and a daily chart on the left side. You guys can all see that pretty well, I trust. But you can see last week nothing going on, very tight, and we haven't seen this type of tight action for a while. I don't know if I've ever seen it for the entire week of Thanksgiving, but we definitely got that. You see the trannies are acting okay. Dow Jones Transportation Index. Utility average coming in, but that makes sense because the general view is that interest rates are going to rise, so utilities are going to fall. So basic teeter-totter effect. NASDAQ 100 holding tight up above these highs, but you're still a fair ways. Well, actually, I take that all back. We're actually near pushing up into all-time high ground in the NASDAQ 100. Is that a good sign? I think it tells you mostly that the market is being led by big cap NASDAQ names, and we've seen that. We'll get into that in a little bit here. But, you know, NASDAQ Composite also acting pretty well, but it's approaching its old high here back in July. You can see up here, and on the weekly chart over here, if I blow this up, you can see you're kind of getting into a cup with handle, although I wouldn't get into trying to slap a label on a base for an index. I know I saw some comments on the Twitter page of Kevin Martyr, who's my partner in crime over on the Gilmo Report, where these guys were arguing over a 38% deep handle in the indexes, or the NASDAQ, whatever you're looking at, S&P 500, is improper, blah, blah, blah. I mean, come on, seriously? Are you really arguing over how deep this is as a deep handle, and therefore this isn't a valid cup with handle? I'd say if you're going to make a big issue out of what this is as a base, you could say it's an improper double bottom. You could say it's a really deep, ugly-looking cup with handle that's failure-prone. I mean, you could slap a lot of different labels on it, so I wouldn't get bogged down in that. Basically, look at it on a granular level, and what you're seeing is an index that basically is holding tight along with the others, the Dow, and as we'll see here as I scroll through, NYSE Composite, which is a broader NYSE index. You're getting some decent color up here at the top on the bongos and the force index that I watch on a regular basis on my charts. Philly Semiconductor Index is coming back, so that's actually coming back, as you can see from the weekly, from a deeper position. So it's not really figuring into the whole mix, although it is telling you that with the semis recovering, this has been an area where we've seen a couple of names like Integrated Device Technology and Infi, two semiconductor names, doing pretty well. You've also seen Intel coming back as well. So that index has been doing better. Russell 2000 was leading last week. It was the only one that was trending higher. So you had more small caps coming to life. I noticed breadth has picked up a little bit. You're seeing the advanced decline lines on the NYSE and on the NASDAQ back up to where they were, say, a month ago at this peak, which would correspond to this peak in the indexes. Here's the S&P 100. See, very tight. And you'll notice like the Dow, the NASDAQ 100, the S&P 100, these are the big cap indexes, and they're holding very tight. So it's telling you that the big caps are really where it's at, although you're starting to see the small cap names start to percolate, and that I think is probably constructive. I mean, if I looked at this market on the basis of what I'm seeing in the indexes, then I would say we're probably getting set to move higher in December. So if that's the case, the real question, you see the S&P here, also pretty flat. What else? This is a broad HGSI or HGS Investor Software Index, the S&P Composite 1500, which I like to look at as well. It's a very broad index and can give you a pretty good picture of what's going on in the broader market, kind of like the New York Stock or the New York Composite Index, and some other larger index. I know the Russell or the Wilshire 5000 was one we used to look at, the IBD 6000 way back when, but for now I like to watch this one. And with all of this, like I said, with all this moving tight sideways, I think you're probably setting up to move higher. I mean, I suppose there's a probability that things could fail. Looking at the futures right now, let's see. Take a quick look at these. NASDAQ down, NQ's, NASDAQ minis down 475. That makes sense. I mean, a little pullback probably tomorrow morning. And I was thinking you might see this because retail sales came in somewhat weak. You're not, in other words, not that they came in weak, but that you're not seeing much activity in the retailer, and so sales are going to be light. But we've known this for a while because the retail sector has been getting pounded for a while. Everything from Walmart to Under Armour to Dick's Sporting Goods to I think was Ross Stores. Let's take a quick look. Well, let's get to some stocks first. Some of these others. Okay, what's going on here? Okay, here we go. Gonna get rid of this. Let's hop to some stocks here. So like Ross Stores, I think. I don't know, is that getting hit? Excuse me. This should get it. Bingo. That's coming back. But you've seen things like Walmart getting tagged. Target hasn't been acting very well. But so we've seen the retail sector getting hit long before Christmas season, which seems to be a foreboding of weakness over the Christmas sales season. So someone says Nordstrom got killed. What is that? NDE? No, NDE. I'm trying to remember this. NWD? Is that it? Or NDW? Nope. JWN. Shows you how much I look at that stock. Yeah, that got pounded and it's been drifting higher. So not really a shortable gap down, but see what's been happening with this for a while. It's been coming down. So a lot of the retailers, even Ross Stores, I think, has not been acting that great. Target, I think, was another one. So my point is simply this, that we may see the indexes come off in the morning, maybe a little bit because of the retail weakness, but I think that was coming. And you're going to be wanting to watch some of the other names like the techs, the social networking names, which seem to be acting pretty well. So with the indexes hanging in tight, the real question here for me is, coming in tomorrow morning, what is in position to buy if the market's going to go higher? So looking around, I noticed there's a number of things. We can start with the pocket pivots that we've had since, this is a list of pocket pivots since the beginning of October, since the market started coming off the late September lows. And so you can see Acuity Brands has probably been the best performing one. This was the pocket pivot back here. Hopefully you guys can see all this okay. I don't know. Do you guys want me to use a cleaner chart or is this one good enough? Let's go with the crosshair here. But this is the pocket pivot right there. So you came off of the, I'm sorry, right here, off the 200-day moving average on earnings. And, that's pretty good move on that day. I would have preferred to buy weakness on a pullback, but it never had that. So you had to buy it along the 50-day here. And it's moved higher since then. But if you look at this on a breakout perspective, the breakout was here, and you've moved a little bit higher. Not a huge amount. So the best move you got was off the pocket pivot. And in this market, that's where you're going to get your better moves, where you have a pocket pivot deep in the pattern or down in the pattern in the base, and then it comes out and moves to new highs. So, okay, everybody likes this chart, so we're going to stick with it. I like it too. It shows everything. It shows the volume levels here, minus 49.2%. Let me pull out my handy dandy little pan here. There it is right there. See that? Scrolling through, let's take a look at some of these other. Google, the pocket pivot here, but this is really the place to buy it. Bible Gap up here. I think I talk about this in other webinars, previous webinars, earlier in November or in the latter part of October when it occurred. So that's acted well. We had a pocket pivot here, if you guys recall, in Apple, right here on this day, and the stock, let's see if I got that right. Yeah, that was a pocket pivot, and then you had another one here. I don't know if that's very clear. I think I still like using the crosshairs better. So let's clear everything out. Whoops. There we go. And we've got our crosshair here. So we've got, let's see, you had a pocket pivot here. You actually had one here, I believe. That was probably a 5-day pocket pivot, but you had this one. It moved higher to the 200-day, but then it became shortable again and it's broken down. Now you're sitting along the 20-day, and volume is drying up. So the one thing I like about this, I don't know if you guys can see this, but if you look at, if I make this a little bigger, if you look at the bar here, let's see if we can make it real big. You see how the volume here is showing the projected volume if we had had a full trading day based on what you did in the first part of the day. So since it was a short trading day on Friday, I actually can get a read on what the volume might have done if it was a full day. And so you got to also figure that if there was any trading to be done in the stock by institutions or anybody else who has a large position in Apple, more of the trading might be skewed towards the beginning of the day. So, it's not 100% perfect, but it does give me some idea of what's going on. And what you have is as I see it, you're pulling into the 20-day line, and it could push higher. On the weekly chart, though, this is what it looks like. It's a big head and shoulders. So, neither here nor there, but I think if you saw it get up towards this high up here, which I think was 124, 123.82, it might become very shortable at that point, and maybe that's what it does going into year end. I mean, we've only got, 4 weeks or so, and if you take out all the holidays, not that many trading days, so maybe 17 or 18 real trading days. So there's not a lot of, say, trading time left in the year to juice a big rally in here, to get a big juicy rally going. But you could rally up to the 123, 124 level near this high, and then it might be shortable come the new year. So we'll see what happens there. But that was a pocket pivot we've had. Bank of the Ozarks, I think, had a pocket pivot here, and it's gone nowhere, okay? And I find that's the case with most of these. And the only place you've really made any serious money, and when I say serious, I'm talking like, 8 to 10% or more if you're lucky, but I haven't really seen that occur, has been in these big cap NASDAQ names like Amazon, like Google. And so that's been really the place to make money. Acuity has done pretty well, as we saw. CDW, another pocket pivot here, but where's that going? Right here, another one here, going nowhere fast. This is actually a 5-day pocket pivot, and the blue highlight will pick up a 5-day or a 10-day pocket pivot. So this you can see on the chart is a clear 10-day pocket pivot because the volume is higher than any down volume over the prior 10 trading days, and that's pretty clear there. But on this one, you can see this one's higher right here, and that's only 1, 2, 3, 4, 5, 6, 7 trading days ago from here. So that's a 5-day pocket pivot. Now the reason I had them code this way so that it shows 5-day and 10-day is that I will look for clusters of 5 days, 5-day pocket pivots. And you see right here, notice how right here you see a cluster of 5 days. There's actually 1, 2, 3. None of these is higher than this day here, right? But it is higher over the prior 5 days. And so you get a cluster, and then boom, it goes higher. And I found when you do get a cluster of these 5-day pocket pivots, that can be similar to a single standard 10-day pocket pivot. And that's one of the reasons I had the guys at HES Investor code this way. So anyways, cruising through more of these. Cognizant, here's one that had a pocket pivot here, and it just kind of sputtered away, to the downside. Constellation Brands, here's the pocket pivot when we put it on, and notice how this one has moved higher. It's a big cap name. I believe it's basically alcoholic beverages, which I can understand that entirely in this market. but you had the pocket pivot here, and that's a 10-day pocket, and it's gone higher, and pretty steadily so. So that's been a name that you wouldn't expect to be much of a mover, but it's had a decent little move. I'm going to say about 10%. DHI, DR Horton, home builder, pocket pivot here, pulled in, and this is where they become viable, on the low volume, the declining volume here, pulls into the 50-day, boom, going higher. So, but not in a buy position. So far what we've been looking at here isn't in a buy position. Now here's one that you could consider is in a buy position. And what you have here is a big volume outside reversal back to the upside. That's also a pocket pivot, and it's also a base breakout. This thing's been going higher for a while. This is the weekly chart, so you can see a lot of volume in here as it's tried to go higher. A lot of spin outs too. And you get a pullback into the 10-day line on lighter volume. And you can see even the projected volume, the green bar there. Make this real big. You can see that the projected volume would have been below average there. So that gives me a pretty good idea that this was a nice pullback on lighter volume. Ellie Mae, this was a pocket pivot here, but yeah, I mean, look at this thing. It's dived. It pretty much died. Dived and died. Toast, in other words. Let's go back. Where are we? Euronet Worldwide. This one had a pocket pivot here, but it also had one here, and it's going nowhere fast. Facebook, the Bible gap up failed, but in my view, you really had to be buying it here when you had the pocket pivot breakout, which is right here, and we put that on at that time, and the stock continued higher, then blasted through the 100 level here on this day, and there's a 100 level. Hopefully you can see my crosshairs. And we had the Bible gap up, but that failed, and stock found support here. This is a day that they announced that Mark Andreessen sold 73% of his stake, which is about 1.5 million shares. Now this thing trades 34 million shares a day, roughly, I believe. No, 28 million, sorry. We can see that right up here. 50-day average volume, 28,524,074. And now we're pulling in. Notice how volume is drying up. It has been drying up partially, and maybe more than partially, due to the holiday, but it's also telling you that you're not seeing much in the way of selling as it drifts into the 20-day. So this is in a buy position. So probably tomorrow I'm buying Facebook, depending on how it opens up. GoDaddy, here's another one. You had a Bible gap up, but as you can see, it's gone nowhere really. But I think if you're looking to buy this, okay, you got a big cup with handle. Notice how the handle, though, is pretty wide. There's no wide and loose, and there's no real tight closes on a weekly basis. You can see you close here, you close up here, you close down here over the last 3 weeks, and it's really gone nowhere fast. So it probably needs more time to tighten up. That's my thinking. And as you can see on the daily, you had a pullback into the 20-day on Wednesday, and then it trades off the line and then back up to the 10-day, but it's still churning around a little bit, so it may need to get tight in here. And I think the closer you can buy it to 30, if you bought it on the Bible gap, I think we put that on when it was trading right around close, between 29.50 and 30, I think, somewhere in there. But it's a squirrely stock, so 10 minutes later it could have been 80 cents higher. And then it pulls back into 20-day here, gives you a chance to buy it, gives you another chance to buy it here. I think you're just trying to pick this thing off near the lows, near the 30 level and the 20-day line, somewhere in here along the lows. And just watch this thing as it tightens up. You can see that as we're ranging back and forth, it is starting to maybe tighten up just a little bit, but we'll see how this goes over the next few days, next few weeks. Helen of Troy is another one. I think we had pocket pivots here, but it's not going anywhere. It's going nowhere fast. INC Research had a pocket pivot here, and we put that on right there. And that was before it broke out through this range, but now it's coming out the top and just drifting a little bit higher. So that's starting to work. But nothing really happening in terms of big price moves. That's the problem with this market. And it's understandable given that the indexes are just chopping back and forth. There's no real, big money juice up there. Where are the Teslas of 2012, or was it, I forget, 2013, whenever it had its huge move. We can settle this one pretty quick. Nope. When it had this move. So this was in 2013, yeah. So, where are these? yeah, you're not really seeing them anywhere. So, and Tesla's not looking so great these days. Anyways, back to my list here. Where were we? IDTI. Yeah, so that's one. Also, another semiconductor that's moved higher. So the best place to buy it was here, but it's been a slow boat to China, but it has moved higher. About 30% higher from here. So that's one of your better plays. But look how slow it is. Luxoft Holdings is holding in real tight. Now this one you can even see on the projected volume down here. It's very light on Friday, even on a half day. So after this Bible gap, but this thing's got to get going soon, and it's very tight in here on the weekly chart. Though it's slightly wedging. You see that? So I'm not sure if that means it needs to yank in a little bit. So if you wanted to test this one here and take a position, I think the 10-day line would be a tight stop, and then you'd bail and then look to come back in on a retest of the 20-day line, which might help to bring this in a little bit. But it's slightly wedging on the weekly chart. So Manhattan Associates, I'll get to questions in just a second here, is another one we put on. I think it's had some pocket pivots in here, right here. Back in here, it had this Bible gap up type pocket pivot, but it's moved slightly higher. But you have to sit through all this, so you're not getting any major trends. Max Linear, we just put this one on. Notice how it's stalling a little bit here, and it's kind of wedging a little bit higher along the lows, and I don't really know if I'd be jumping on that one. Maybe a pullback to the 20-day moving average. Norwegian Cruise Lines, we put it on here. That was dumb because the next day they announced earnings and it went lower. Again, if you're playing earnings roulette, I know a lot of people are talking about buying Ambarella, and I'll get to that one too. O'Reilly. But you can see for the most part, we just put this one on. It's not going anywhere. This one, I think we put on somewhere, I don't know, up in here maybe, back in here, I forget. And it's just dying, Shopify. Starbucks going tight sideways. I think it had a pocket pivot here. Was it here? Kind of stalled, and it's going nowhere. But notice how it's pretty tight. It's a big cap name. Maybe this is one to watch for some kind of a move off the line. Take-Two Interactive. I think we had a pocket pivot. You had like a Bible gap up here, but that sort of failed. And then 2, 3, 4, 5. This would be a couple of 5-day pocket pivots, but it's trying to move higher. But it doesn't look all that exciting to me. And I think a lot of what happens to some of these game makers is going to be dependent on what happens with Christmas sales. Ulti is pulling right back to the top of the base. If you look at it on a weekly chart, tried to break out back here in July, and of course when the market failed in August, it failed and broke back down. Set up again, coming out. Now you get a base on top of a base here, and you're pulling into the 10-week moving average now, volume drying up. So if you want to take a shot at this one, this is probably where you would do it. If you maybe get it close to the 50-day line, you could try that, but I don't know. So somebody's asking me about INCR. Does the weekly chart for INCR look problematic? I don't really like that word, Scotty. Problematic, what the hell does that mean? Problematic. That it has problems. I don't know, it's moving up the side of the chart pattern, so I don't really see anything problematic. Are you talking about all this volume on the left side? I really wouldn't worry about that. I know O'Neill makes a lot about, volume in the base, but I found that you can have more down volume weeks in the base and still go higher. So what do you mean? It's a double bottom, but again, what's the low here? 37.51 here, and $37.53. I don't know. They're kind of the same. This could still work. I've seen patterns where the double bottom looks improper, but the stock just continues to go higher. And I think in the case of this one, if you bought this pocket pivot here, it's just going higher. So you don't really have to worry about how problematic the base is. I think you can just wait and see what happens in real time. It does look sloppy. So I'm along the stock, but this thing only trades 339,000 shares a day. I'm not going to buy it. It's just too thin. But if we look at some of these other names, like look at Infi. I know what's going on here. Let me shift lists here. This is pulling right back into the 10-day line. The pocket pivots down here, I think we put these on. This one has worked, and you've gotten some decent movement higher, but it's not. There's nothing really, fancy going on here in terms of a big, exciting move. It's just kind of trucking higher very slowly, and the way you buy this thing is when it comes into the 10-day volume drawing up, but holding tight here on Friday, and it projected actually to pick up a little bit. But like I said, you can't make a, treat this as some sort of holy grail that's going to project the accurate volume. It does give you some idea that maybe volume was picking up that day, but it did hold tight along the 10 days, so that looks okay. I take a shot at this one, and I like the name, the semiconductor in the cloud space, and they're going to have pretty good earnings going forward, so that one looks okay. We look at Dicom. I think that's another one. Maybe a shot can be taken here. Facebook. We looked at, that's another one I think we could be taking a shot at tomorrow. LinkedIn is another one to take a shot at tomorrow. Pulling into the 20-day as volume's drawing up in here. Now you had a viable gap up, and it's taking some time to go anywhere. I know IBD's talking about a 258 buy point on a cup with handle. I don't know. To me, this is all just BS. Waiting for a breakout, I guess, through the peak of this range, but the way I would just look at this, it is kind of an ugly pattern. So that, that's not a what I would call a proper cup with handle. So, I guess if you have to sell newspapers and you need to keep people interested and you need to stay within the vernacular of your narrow little dogmatic system, then you say this is a cup with handle and this is the handle. And the way I look at it, screw all that, pardon my French. It's a viable gap up right there. End of story. Okay. If I want to buy it, I buy it. If it breaks below the low and I give it 2 or 3% porosity on the downside and it breaks that or whatever my stop is based on that intraday low of the viable gap up, then I'm gone. But trying to sit here and say, oh, we're going to wait for this to break out. It may break out and then fail. And by that time, you're going to be, 280, 270. But now, I guess the high, I'm trying to figure out where this 258 buy point comes from. I guess it's the high of this little flag here. So, but this is a pretty ugly double bottom, and but it wouldn't surprise me if this failed as well. So, I'm just going to play it as it lies. And in this case, you got the pullback into the 20-day. That's a very tight stop. So the 20-day line is. Let me reference another chart here. See, that's one thing I get these guys to put on is where the moving averages are. And in this case, let's see, the 20-day moving average, exponential moving average is 242.15. So that's your reference for your stop, and you close at 244.59, so you're 1% above it. And it got close during the day. I think the low for the day was what? 242.79, so it got very close within a few cents. And I think that brings it into viable range using that as your stop. I mean, you could give it more room because it's only about, let's see, if this is a low of 136 or 236, I'm sorry. So in your trade, you're at 240, so you're 4% roughly away from the intraday low here and about 1% or so away from the 20-day moving average. So you can come in here and look for a turn out of here. If you don't get it, you can always run for cover. So quickly, and you're not stuck there sitting around waiting for a 7 to 8% loss. Which in this market, so many things fail that I think if you're using a 6, 7, 8% loss as Cancelim dogma prescribes, you're just going to get chopped up because you're going to buy a breakout and it's going to whip down on you and you're going to be out after 7%. Take the loss, it's going to turn around and go back up. And it's going to happen over and over. And I think a lot of people have been chopped up using that type of system. It's too simplistic for this kind of market. If we get into a nice roaring bull market like we did after World War II and that extended from, say, 1981 or 82 up till 2000, if we get into another one of those, yeah, you'll have better luck with breakouts. But in this market, it's a different story. And I think one of the most telling things that conditions have changed is that I don't know if anybody still reads IBD. I don't, but I have noticed that they are now teaching a swing trading segment at the so-called Masters program, weekend webinar. I'm sorry, weekend seminar thing that they do for I think it's now 10 grand. It used to be 15. It's dropped now to 10 grand, but they're now doing a swing trading segment. So now they've finally admitted that this is more a swing trading market. And if you're trying to buy breakouts, you're just going to get chopped up. So all that is to say, sitting around waiting for LinkedIn to break out may be the dumb thing to do, and maybe this is where you buy it down in here, and then you get a nice move from here, say up to closer to 300, and at least you make some money, 15-20%. Amazon's another one that was buyable on the gap up here, and that's moved higher. Had a nice shakeout here, and this is what I'm talking about. If you buy something at the 10-day, if I buy something at the 10-day and it doesn't hold, I just sell it and then see if it comes down to the 20-day line. In this case, Amazon did that. It was getting pounded on this particular day on heavy volume, but look how that turned into a big pocket pivot off the 20-day. I will buy pocket pivots off the 20-day moving average, so I know it's not part of the old rules for pocket pivots, but I've seen pocket pivots off the 20-day moving average, or at least big volume support off the 20-day moving average, which is what this is as well. I've seen that work, so I'm going to buy that, and the stock has gone higher. Now you're drifting sideways along the 10-day line, so you'd want to use a pullback into the 10-day line, which I think is somewhere around 665. Let's take a look. 662 and change. 662.55. So that's where you might look for a pullback there. Same thing with Google, which has gone higher after this pocket pivot. And you have the pocket pivot. See, if you're chasing the pocket pivot, they're just going to yank you in. That happens a lot. So I'll sit around waiting for weakness. So here you came down to the 10-day line on Tuesday, I believe that was, when we had the news coming out of Turkey that they shut down a Russian jet. And that just turned out to be a big shakeout, and the stock's gone tight sideways. So it may just go higher from here, depending on what the market does. If it pulls into the 10-day line, then I think you're going to want to look at using that as a potential entry. That's at 762.10. And stock close at 771. That's not very far. So just pretend if it's a $771 stock, think of it as a $77.10 stock dropping to $76.21. So that's really not that much, and it could do that pretty easily. So you would look for a pullback like that perhaps to buy into. If it went back through the 10-day line, then of course you're watching for a move down to the 20-day line. And these are the things I'll be watching for as we push through the next few days. I see the futures heading down a little bit on the Qs, the NQ minus 650, the ES, which is the S&P Mini, minus 425. I watch these because they're a little more liquid, and I think you get a little more accurate. They can be a little more squirrely, but I like to watch these because you get a lot of retail sentiment in here too. It's basically futures for pikers because they're smaller contracts. Let's see. Somebody says, will you include swing trading with your martini mixing seminar for $29,995? Sure, Scotty. We'll probably do that while we're drinking the martinis, so that should work. True. Is this a pocket pivot? Okay, somebody's asking about a stock. Let's see. True. Is a pocket pivot where? I don't really see it. No, this is not a pocket pivot. There are no pocket pivots in here. At least not lately. I see something here. You've gotten some pocket pivots. I think here, this looks like a pocket pivot right here. Just checking the volume. Yeah, these three here are valid pocket pivots. This is one. I mean, you're getting some pocket pivots in this thing, but this is a new issue, and just look at how sloppy this weekly chart is. I'll do my best to make it look prettier, but it's coming into the 10-week line. Trades 428,000 shares. TransUnion, what is this? Some sort of finance company. I don't know. It's really loose and kind of. Yeah, I mean, you can even see here on the daily chart, the daily ranges are pretty wide, as much as 10%, 5%. Let's see, from here you go, high of 25.82, a low of 24.19. Yeah, you're getting 7-8% deep it's a little squirrely. So I guess if you'd wanted to buy it, you could say these were pocket pivots here, okay? And you just throw out all opinions. If you want to trade it on a purely technical basis and you're not too concerned about all of this looseness in the weekly pattern, then what you can do is buy it using the 50-day line as a stop, and that's reasonably close. So whether I can bless this for you and endorse it and tell you that it's going higher, I don't know. I don't know if anything's going higher in this market, to tell you the truth. All I'm going to do is take my shots. I see some things over the weekend coming into logical areas of support, like the Facebook, things like the Dicom, the Infi, LinkedIn. Probably Facebook and LinkedIn, my two big stock buys for tomorrow, assuming they're in the right position or something doesn't fall out of bed tomorrow. So that's how I'm going to approach tomorrow. And I have some things on my list to buy. So that's what I'm trying to convey to you guys this afternoon as we're lazing on a Sunday afternoon. Can anybody name the band that sings that song? You will be dating yourself, I think. Although my kids are into this particular band. Anyways, let's see. But whoever's Robert, who the person who asked this question, I think your eye's correct. I'm just not so sure. They're a credit reporting, credit score company, I guess. That's pretty hot, I guess. I think those commercials. There's one of them that's just kind of ridiculous, where the person is getting all cocky with the loan officer and putting her feet on his desk and asking him what he's going to do for her, as if there's something noble about having to borrow money. But I think it's the total piker debt mentality the whole country has moved into, where if you're some small timer with a great credit score who needs to borrow money, there's something noble and wonderful about that. Spanky and our gang. No, Sam. It was Queen. So now you're really dating yourself there. Of course, I remember the Little Rascals and our gang and the whole thing. Activision Blizzard. Someone's asking about. That's actually nice and tight, and this is a very thick trader. That's a decent name here. Earnings growth isn't all that hot though, but forget that. It's holding tight. Isn't somebody buying them out? I heard there was one gaming company that was being bought out, I think. If it's not being bought out, let me check this real quick. Nope, I don't see that they're being bought. Here's some news about some hedge funds increasing their position. One firm raising their target to 41. This actually looks decent. Earnings aren't necessarily the greatest thing in the world, but I like the way it's holding up tight. So this is one maybe you could look at. So good idea. And I trade things mostly on technicals these days because I think, or I believe rather, that this whole business of 5 quarters of earnings up and return on equity this and sales growth 20% or higher and blah blah blah. To me, that's all looking backwards. It's rear view mirror stuff, and everybody knows it. So I think a lot of, and I've talked about this many times before, a lot of what institutions look at is more the forward-looking story. And where do we find that? We find that in the technical action first, because stocks will discount the future. And so if institutions are basing their views on a forward-looking situation, then it's going to show up in the technicals. So I just stick to that. Someone's saying that they're buying King Entertainment. Okay, so then maybe that's good for them. Does King Entertainment, they make that Candy Crush game, right? Dexcom. Here's another one that'll drive you nuts. Trying to come up. You got a pocket pivot here. That's interesting. This could very well be trying to turn. You got a big volume support at the low. Very tight along here on the weekly chart. Now trying to come up above the 50-day line. So that looks kind of interesting. Some of these I'll keep an eye on tomorrow and see what's shaking. What else? Nvidia. I picked this up over the weekend as well. Another semiconductor holding tight. Maybe it pops, maybe it doesn't. I still think I'd rather own maybe an IPHI, because you notice how this thing's pretty slow, but at some point it could pick up some momentum if the market gets going into year end. And obviously that's not clear right now, but that could happen. So let's show you some other names I'm looking at. You know, the airlines, whenever there's a terrorist attack or something, you know, nasty, or a State Department comes out with a travel advisory, they get hit. And when they get hit, usually that's a buying opportunity. And so I noticed, you know, Love coming down to the low end of its range here, trying to hold the 20-day, maybe something that will sit there. JetBlue, or try to come higher rather. JetBlue holding tight. It's a little below the 50-day, but you can see this black 65-day exponential, which is really what it tends to obey. And it's looking like it might want to press higher from here, might come out the lows. And I would be more inclined to buy these this way than chasing them on strength. Virgin America is going to have some pretty big earnings growth over the next couple of quarters, and it's been trying to go higher. If we look at it on a weekly chart, in fact, I think they have some of the better earnings of any of the airlines going forward. Next 2 quarters up 90 and 70%. But you see when they came public, you had the big IPO move, okay, and then it dies, and you get this big cup formation. Now you're forming this sort of ascending base. If we count this from here, it's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 weeks, I believe. Let's make sure, 15 weeks in duration now, which is about typical for an ascending base. We have 1, 2, 3 pullbacks. And this latest pullback compared to, say, this one where you were closing in the lower part of the ranges, and this one you did get support here on this big pullback. But now it's a higher high, higher low, higher high, now higher low here, and you're getting support at the 10-week moving average. So this one is one that I thought was viable in here, and notice you got a shakeout here. So you could use a shakeout plus, say, 2.5, 2.5, or just wait for a pocket pivot up through the 10-day. But my inclination would be to try and buy it as close to the 50-day as possible. So when you look at all these State Department travel advisories, they issue a whole bunch all the time. In fact, they can have as many as 20 or more active at any given time. And of course, with the things that occurred in Paris a couple of weeks ago, it makes complete sense that they're going to issue another travel advisory, like, you know, as if it's something you didn't know already. If this kind of stuff is going on and you're traveling in Paris, as that one girl who was a student at Long Beach State, or I think it was Long Beach State, which is local to me here in LA, she was killed at one of the restaurants. So, you know, my theory is when you're going to die, your number's up, and her number was up apparently, because that's a little bit random. And how do you know when you're safe and when you're not? So it still remains the case, we talked about this last week too, that your risk of being killed in an auto accident on any given day is far, far higher than your risk of being killed in a terrorist attack. Not that it can't happen, but there are so many dangers in life, I don't know if you can focus on that. But my point is simply that when these advisories come out from the State Department, or these events occur like in Paris, and you see the airlines drop, I think you might look at scooping them that way as opposed to chasing strength. So one idea that I'm looking at, that's Virgin Airlines. Remember last week we were looking at Nuance, and we talked about how to approach this sort of trade. It was holding tight at the time, and that's constructive action. And my suggestion was, if you believe that this is going to go higher, so the tight action means it wants to go higher, so just give it an excuse and it will do that. Then what you would do is use the lows of the range here, which are at 1981 on this day, or any of these lows here, and you could use that as a stop. Buy the stock in here and use that as a stop, and it's gone up, 5% since then, so maybe a little less, but it's moving higher. But that was a viable gap up here, so that's one that's worked reasonably well. Here's one that maybe nobody's thinking about, talking about the airlines, is GoGo. And if any of you follow me on my Twitter page, I was talking about how this thing could be an ugly duckling buy on this pullback in here. It got a little hairier than I thought, but then you come right back with a pocket pivot right here, coming up to the 10-day, and then the next day you dip into the 10-day, and that was viable. And now this thing's kind of drifting in here as volume dries up, and it's just under the 200-day moving average. I wonder if this thing's going to try and pop out of here. This is what it looks like on the weekly chart, and you can see it's trying to turn, but you're getting some big volume support off the lows in here. So maybe it's trying to turn. I don't know, maybe not, but something to keep an eye on. That looks interesting to me. Let's see. Infineon is another one I've been tracking for a while. I think we've talked about it before. And this is what I'm talking about when I speak of a name that's going sideways and really going nowhere for a while, but it's flashing pocket pivots here and there, you know, kind of like the Infi. And then it'll start to lift off, and you see that here. Big Bible gap up. It more or less holds. You'd have to give this a little porosity because it's a thinner, smaller name, and runs along the 10-day line and flashes a pocket pivot in here. I think it is a 5-day, and a series of them in here. It starts to move up and out. But notice how it's starting to get a little bit of altitude. And if you look at it on the weekly chart, it's starting to come up the right side. And I would count this week as a supporting week right here. That would be 7 weeks. So that's a supporting week. I'm not sure if the closing range on here is high enough. It might be just enough for a supporting week. But notice how you undercut the lows in here, and now you're heading back the ups to the other side. Other people have talked about, because the telecom group's been looking better in some cases, like with Infineon, talking about ANET, Arista Networks, and I don't know about this one. Maybe it works, maybe it doesn't. But the only problem with this is they come out, no, I'm sorry, I was thinking of Ambarella. They don't come out with earnings until February, but it's a little bit of a sloppy pattern. But if we distill it down to the daily chart here, you can see some pocket pivots in here, and another big volume pocket pivot here, but it's slowly trucking higher. Now it's above the 200-day moving average, and you're pulling back in, and volume's dried up. Maybe this has a shot at going higher. I'm not sure. So that's something to look at. Ambarella is one that some people have asked about. They announced earnings on 12/3, so that's this week. I think that's Thursday, so I wouldn't mess with that. Stock's holding tight along the 50-day moving average, so nothing really to do here unless they're going to play earnings roulette. Let's see, we looked at, let's look at Weibo, WB. It's a Chinese social networker. And this one pocket pivoted on Wednesday and then gapped in on Friday. And I have to believe that that was due to the Chinese markets coming off 5.5%. I was a little surprised that our futures were up on Friday morning. And then early in the day, maybe about an hour after trade started on Friday, we started to come in. It's like there was a delayed reaction. But you saw some Chinese names start to come in. This one gapped down to the 10-day. I think this puts it in the viable position here, very low risk. So, you know, it is up a little bit, but it's showing some nice volume figures coming higher. And we don't really have to worry too much about the position on the weekly as long as you have a coherent position here with the proper reference points for a stop on the daily chart. So if you look at Baidu, for example, on Friday, it tried to sell off, and then it turned around and closed above the 10-day line. And what's interesting here is this is starting to recover, but it was a bit of a fake out as it sold off on the Chinese news, and the Chinese market's dropping overnight on Thursday night, and it actually recovered to close up. And if you can see the projected volume, this would have been a pocket pivot, projected to be. Now again, you know, it's not a sure thing, but it gives you some idea of what was going on with the stock. And I think the fact that it had pretty good support off the lows after the news in China hit in the morning and reversed to close above the 10-day line, I would call that a pocket pivot. So this may be viable. I thought it could be shortable if it ran back below the 200-day, but that hasn't happened. So, and you've seen strength in other Chinese internet names like NetEase, which same thing happened there, but it closed off the 10-day line. You see that? And this might be funky for everyone to look at. The chart's a little wide there, but it does help you look at the chart in detail if you want to. You know, you can get really, I think this is as big as you can get, but that's pretty good if you're blind. Like I am as you get older, you know, those of you who find they need reading glasses one day when they wake up and things aren't so easy to read, when they're small. This is helpful. And you can see the Bible right off the 10-day line. I think Cena was another one that was acting well. I'm not sure. Yeah, it's hanging in there, and it's looking like it wants to set up to go higher. So anybody got any other questions here? Let's see. Let's move over to some of the biotechs. Biogen holding tight along the 10-day, 20-day, and 50-day. This almost looks like it wants to go higher, but if you look at the position and the pattern, that's pretty ugly. But what it also tells you is maybe you could rally up to these highs again. And by that time, the 40-week line here meets up with the stock, so maybe a tradable move. You know, swing trading with Gilmo, we can call this. So, hey, if it's good enough for IBD to have a segment on it or a session or whatever on it in their so-called masters program. So now I guess you can be a master of swing trading, I suppose. Is that part of your CanSlim certification? I don't know. But in any case, you can kind of look at this as potentially tradable to the 200-day line. Amgen. Anybody have any favorite biotechs? Like, what's your hot story? I'll actually show you one a little bit here. When I was golfing on Monday at a charity golf tournament, some broker telling me about his Bellicom, which I'll get to. Anyways, this one has moved back up to the highs of this range here. You can see this right up to the high here. And would I buy Amgen? I don't know. Is it going to recover? Maybe it is. You know, maybe it's a big shakeout. It's going to turn and go higher. It doesn't look like it wants to roll over. That's for sure. Gilead's another one sitting along its 200-day moving average. It actually closed above it on Friday, and this is just holding tight sideways. It's come down for a period of time, and it doesn't look that great, but it could rally higher. You know, a number of these could rally higher if the general market does, and I think it boils down to whether Santa Claus shows up or not. So, or as my Jewish friends say, it depends on whether they light all the Hanukkah candles or not. Light them up. And in any case, Celgene's probably your weakest one. You can see on the weekly chart that it finds resistance at the 10-week line. So this stays on the short selling list. You know, I looked at Gilead, Scott. You saw that, right? I don't know if your question came before or after. But here's this other one. And I think it's funny because, you know, the brokers always buy it and they're always up on it. You know, they'll never tell you when they're down on it. But this thing, I guess there was some news. This is what it looks like on a weekly chart. So it's got a lot of recovering to do, but it trades a measly 372,000 shares a day, which is nothing, and could easily be getting pumped up by a bunch of brokers who are on the phone telling their clients to buy it. But you did have a Bible gap up here, so it has moved higher. So I don't really know what the story here is. If anybody knows what it is, let me know. I could probably look into it. But that was Bellicom Pharmaceuticals. There we go. Yeah, probably some news about some drug that's being tested or something like that. Yeah, CRM. That's one of my favorites here. That's another one on my buy list. So I basically am looking at Facebook, LinkedIn, and CRM tomorrow. Palo Alto Networks is another one, but that was Bible last week on the pullback. But if we look at this had the Bible gap up, but it sort of failed. And it's drifted into the 10-day line with volume. Actually, yeah, it was projected to pick up, but you could also see it as supporting action at the 10-day line since it closed just above mid-range on the day. So I think this one looks okay. You know, you just broke out here, and then you pull back into the 10-week line, and then you zap out of there. So first pullback to the 10-week line is usually a viable situation. And in fact, you sort of had that happen with Facebook recently. I think we already looked at IDTI, but we'll look at it again. It's slowly moving higher. It looks fine. There's really nothing here that is compelling one way or the other, actually. I might buy it on a pullback if you saw that, but if you bought it lower in the pattern, there's absolutely no reason to be selling it here. It seems to be acting well, and I think maximum downside trailing stop would be the 20-day moving average. So what else? I'm going to spin through my list here. We looked at GoDaddy. We looked at VA. Let's look at, I did mention this, but we didn't talk about it. So you can see quite clear that I have a concrete plan for tomorrow, and there are stocks that are big stock names, and they've are names that have done reasonably well since the market second low in September, the end of September. So I think that's where you go. I know you're starting to see the Russell perk up a little bit, the Russell 2000, but it's still way down in its pattern. So maybe that means there's more room for recovery, but it seems like what they're pushing are the big stock NASDAQ type names, and Netflix one of these. This guy's acting beautifully. You had a nice pullback to the 120 line or 120 price area, price level on Tuesday on the shakeout. Volume picked up, and this just acts like it wants to go higher, but it has yet to break out to a new high. So maybe it does that, and then it rolls over again. But for now, I think this pocket pivot right here was tradable, and this one here, yet another one here, and they've moved higher. So, or the stock has moved higher rather. SWKS BFPP. They're not buying somebody, right? They got outbid for somebody, and that's there's no bottom fishing pocket pivot there though. That's the problem. You got a couple of 5 days, but not clear to me yet. So I noticed NXPI, their deal with to buy out FSL, Freescale, was approved, I think. So they had a pocket pivot here coming up to the 50-day on Friday. So, and that was on a day of light volume, but projected volume, I don't know if you can see, it would have definitely been above average, almost twice average. So that looks okay. Like it might want to fill the gap, but how much further are you going to go to 90? I don't know, or maybe the 200-day. But that's what you're looking at. So you could say this is a washout where they just washed everybody out. I know a lot of people on the short side, you know, they'll see this and they'll think, oh, I got to come after it, you know. But it's this whole pre-QE view that big volume one way or the other means more movement in the same direction. And a lot of times in this market means big volume in to the downside washes everybody out, and then big volume to the upside washes everybody in, so to speak. You know, if you look back, you know, Tesla was looking pretty hot. I don't know, back in here. I'm trying to think of what stock. Yeah, in here you had big volume in here on the breakouts, and so you see them fail pretty quickly. And it seems like getting more back to this market, maybe it's more typical of the markets in the earlier part of the last century, where big volume in one direction or another actually indicated a turn, where because you were washing out all the buying interest or you're washing out all the selling interest, and then you just naturally turn back up the other way. And in this sort of rotational market, it seems like that's the sort of action that you'll see. So somebody's asked about silica, and silica holding, trying to come out. This is the weekly chart, so if we look back, it's had a pretty, you know, nice dive there. It's definitely at the bottom of the deep blue sea here, but it's trying to turn. And if you look at it on the daily chart, it is going code blue here and hanging tight. I think, though, it still depends on what the oil does. And the U.S. oil fund here is not really doing much anything. It's plumbing its lows, and it doesn't look like it's going to turn anytime soon. So I'm not so sure if oil starts running to the upside. I know that the news coming out of Turkey the other day, you know, that's related to the Middle East, and there a lot of oil comes out of there. So, you know, if there's a problem there, oil price is going to rise. So it's sort of a knee-jerk reaction. I'm not sure necessarily that it means you're going to have a big move out of these. But these are showing signs. This is definitely showing some signs of turning. But you could have argued that at this point here. So not really clear yet to me whether this is something you're going to make big money on. I know one of my favorite oils is Continental Resources, and that's Bible on weakness. It seems down to the 50-day, but it's trying to come out. But, you know, these things are so far down and dirty that it's really hard to say whether they can get any upside momentum going. So futures are coming back a little bit here. So we may, you know, tip down to the downside just a little bit, but I think I have a pretty clear plan for tomorrow morning, and hopefully you guys do as well. And you just operate on that basis. And you've got some ideas here that may be at nice buy points. So that's what we want to look at. Any last questions before I wrap it up here? I'm just looking around. Did I look at Tesla? Real quick, I just want to cover some stuff. They got there's a note out from Credit Suisse that they're going to start getting leverage from their sales next year. Okay, that sent the stock back up to the 200-day moving average. But if you look at it on a weekly chart, all it's doing is bopping back and forth in this range. So this could be a short up here. That's the one I'm looking at, possibly. Or it could just keep going higher back to the highs if the market keeps rallying. So Intel's probably another one I should look at if I wrap it up. Holding tight. Now notice this guy is coming out of a big ugly double bottom, but it could continue higher. I mean, I'm not going to discriminate against it necessarily because it's been acting pretty well. You came right off the 50-day moving average here. Boom, you had a pocket pivot here, and you run up and now you're moving tight sideways just above the 20-day line. So if you pulled back near the 20-day line, maybe that's a buy. Maybe it is going higher. Intel claims are moving more into the realm of the Internet of Things, IoT as they call it now. So somebody's asking, will we get a copy of tonight's webinar? I'm going to post the video later after it's processed. Should take me about an hour or so. So yeah, you will. Let's see. PayPal. Just looking at my quote screen here, what I have that I'm watching. This is a new issue. It's a little sloppy though, but it's more of a reissue rather than a new issue because they were spun back out. Remember, eBay bought them and then eBay spun them out again. And they're in the payments business. They actually have a really strongly growing business, up 38% year over year. But on Friday, I think JP Morgan announced that they're coming up with a pay system, a mobile payment system that will compete with Apple Pay. And of course, all of that, is not good news for PayPal. But you can see here they're going to get triple-digit growth over the next couple of quarters. So I'm just watching this one, seeing if it settles in and gets tight. Maybe it's viable off the 50-day moving average. So, I like to buy stocks on weakness in this market. I don't chase strength. Just making one last check here. Silicon Motion. Some of the things that I'm just going through, some of the things that have been hitting my screen. It's trying to recover. Notice how it's very tight in here. You get a pocket pivot here and holding straight, tight sideways. So that's one I'm keeping an eye on as well. It's a little thin though, so I prefer the thicker ones. I like IDTI is great because it trades 3 million shares. I think whoever came up with the ATVI, now, since they're buying somebody, they're still in play. And this looks good. That's a nice thick stock, 9.3 million shares a day trading, and stock is holding very tight. Maybe it's got to move higher. It's already been trending higher for a while, so maybe it's good for a trade. And in this market, I think if you can get 10, 15, 20% out of something on the long side, you're doing pretty well. And then you can let the magic of compounding do its work, like IBD says when they're advertising for their swing trading session. I don't know. I think it took them a couple of years to figure it out, so I think they're a little slow in the uptake. But in my view, IBD has become more of a marketing organization than anything else. So they've got hundreds of things they want to sell you and 10 different ways to sell them to you. So I'm always wary of any of that, and especially if you're not going to admit or acknowledge that pocket pivots and Bible gap ups and voodoo days are valid buy points, because those are really the best buy points that you're going to find where you have the best shot at making some money. And I'll just close out by showing you Acuity Brands, for example. This was your pocket pivot here, here, and here. Okay, and those are in the base. And I doubt very much if you're going to go to an IBD seminar and they're going to talk about buying things like that using pocket pivots. And I'm not really quite sure if you don't have any particular or specific methods, techniques, whatever, for buying stocks in their bases or coming up as they round out the lows of their bases. I don't really see how you generate any major swing trading profits in this market, unless you're just going to tell everybody, oh, stock's up 20% from your buy point, take your profits. and it's always something that wasn't so easy to buy. Like I know, for example, Amazon is one where it's up 20% from this breakout here, or something like that. This breakout, yeah, here we go. So you sell it, but the only problem with that breakout is a gap up move. So it would be harder to jump on those things if you don't acknowledge buying stocks on viable gap up. So uh, I think it's flawed in that sense. And I think unless you have, like I said, methods and techniques for buying within a base, then I'm not so sure you're going to be able to profit that much on a swing trading basis. So anyways, that's all I've got. You guys enjoy the rest of your Sunday, and we'll see what happens tomorrow. Let's see, the futures are rolling over again, minus 675 on the NASDAQ, the NQ, and minus 4 on the S&P Mini ZS. So we'll just see what happens. So I'm actually in cash, looking to see what happened this morning, or I'm sorry, tomorrow morning rather, and then we'll see what happens in terms of deploying on pullback. So now if everything blows up, then we may be looking at the short side. But the one thing I would note is that I'm not seeing anything on the short side just yet. Maybe Tesla at the 200-day moving average, but other than that, it's not too much that I would consider something that hasn't already been beaten down, something fresher, say, on the short side. So I think that's telling you that we're probably going to try and go higher in December. How much is anybody's guess, but that's what it looks like for now. And like I said, I've got concrete ideas, actionable tomorrow morning, and hopefully that's helped you guys out as we have lazed on a Sunday afternoon, and I'm going to laze on into a Sunday evening, and we'll catch you guys later on in the week when we do our regular webinars. All right, take care, everyone. Stay out of trouble.